Hello everyone, welcome back to my channel. Welcome to Babyfield Finance, the place where we approach the market with a simple mind of a baby. So today I want to share with you the trading opportunity that is setting up on Pound USD, and I want you to be attentive as I'm going to be sharing the trading strategy we have been employing on this channel, and it has proven to be profitable, and I want you to pay close attention. So without any further ado, let us dive into it and start the analysis from monthly time frame. Let me clean the surface of the chart by applying the default template. So here on monthly time frame, we see a market that has been going up for a while. It has been going up for a while like this, but this move up is corrective. You can see it has been making higher high and higher low, and all this higher high and higher low is correction relative to this giant move to the downside. So when the correction tap into this liquidity pool, this supply liquidity pool, it starts from the close of this green candle to the high of that green candle. That is the liquidity pool, where the number of sellers that enter market was greater than the number of buyers that were available then. And due to the fact that buyers were not sufficient, the seller took over, and you can see market break the structure to the downside. It broke the structure. And one thing that we notice again is immediately the market break the structure, immediately it broke this structure, it encountered another structure. And it is this phenomenon I call double barrier phenomenon. Just like human being, if you are running and you just pass through an obstacle, and immediately after that obstacle you encounter another obstacle, there is high probability that you are going to get your strength exhausted. And the same thing happened to the market. It created this structure. Then when it tapped into the source of this powerhouse, the liquidity pool in form of supply, excessive supply, it was able to gather enough strength to break through this obstacle here. Then it encountered another one. Then the strength got exhausted. And because market has memory, it encountered a kind of obstacle here. Then it remembered that there was a place it tapped into before. So it remembered that this zone was very rich in supply. So it quickly run. You see market move back to this zone aggressively to tap into it. So the purpose of this first move to the downside was to mitigate this zone. And it has done that. It has mitigated this zone here. So going back to this place to tap into the liquidity pool, when it is coming, this zone will now hover any kind of obstacle on its path. It will not be able to stop it. But the reason why market was unable to move with huge force was because the number of sellers in the first place has reduced relative to the first time when it tapped into it. So anyway, the market will be able to pass through this place. And when it passes, the next area of target is this liquidity pool in form of demand down here. This liquidity pool in form of demand down here. So what I am saying is this market tap into this supply zone, and it gains strength to break this structure. It gain enough strength to break this structure. Let me change the color to make it look good. So market broke the structure to the downside, and immediately it broke that structure, it encountered another structure, and tapping into that structure require the market to reverse. It requires market to reverse and revisit this previous liquidity pool. And that was why market came here. And market has touched that. remember that this place has been mitigated, so we don't need to put it on the path of the market again. Now the next area when that market gain enough strength is this place down here that the market is targeting now. So what we can see is that this market is bearish on monthly time frame. So we carry that information to weekly time frame. On weekly time frame, we can see a market that has been breaking structure to the downside. It has been breaking structure to the downside like this. You see a market that broke this structure to the downside. So, and when it broke the structure, it was unable to make it to the next demand zone. Then it got its strength exhausted. So the reasonable thing market can do in a case like this, after breaking a structure, it lost its strength without getting to a demand zone here, is to revisit the nearest supply zone and tap into it. When you are traveling and the fuel inside your car gets exhausted, the most reasonable thing you can do is to look for the nearest filling station and refill your energy. So what we can see here is that market is now looking for a supply zone, and you can see it has tapped into this supply zone, which is the liquidity pool in form of supply there. So the next thing the market will be targeting based on weekly is this place here. There is a liquidity pool here. Now let's go to daily to see what the market is saying. You know, monthly has agreed that this market is going down. Weekly also has agreed that this market is going down. It has even tapped into the liquidity pool, as we can see here. So the next thing is to go to daily time frame to see what we have there. On daily, you can see that rejection. That rejection is huge. So it shows that this place is very rich, and this is where we are targeting down here. We are targeting this weekly demand zone. So should we enter right now? Hell no, because when daily was going to tap into this liquidity pool here, it has formed a bullish structure. It has broken this structure to the upside. It has formed a bullish structure. You understand? It has made it uptrend. You understand? So until market break below this and confirm that daily is now a bear market, we are not allowed to enter. We are not allowed to enter because market is always right. We are not allowed to enter. So until market do that, we won't be able to enter. So if market do this, which I have just drawn, then the double barrier scenario, the double barrier phenomenon, which I have explained the other time, is now playing out again. You see, when markets come like this, it break the structure, it retest it, confirm that it is a structure. Now, if markets break to the downside, we have a barrier here broken, then encounter another barrier. And when that happens, market like to revisit the source of liquidity, which is responsible for the barrier broken here. Where market tap into to break this barrier is the source of the liquidity, which is the liquidity pool that the market will be targeting. So when market tap into it, it is this zone here, from the close of that green candle to its high. So when market tap into it, then it will be able to go down like this to our target here. That is it. So that is how we approach market from this side, and it has proven to be profitable, and patience is one of the key we have been using here. So now when market form this thing down, the newly liquidity pool is this place. So markets will now go up to tap into that. When it tapped into that, this is our entry. We enter, and our expectation is this place. You understand? And half of this our expectation will be our risk. The half of the whole of this will be our risk. So hope you understand the concept. Until the market break the structure to the downside like this blue something I have just drawn, then it is still a bullish market on daily time frame. You understand? So with that said, we know that the next area of next pool that we'll be targeting is this place here. When markets tap into it, then we'll be able to come down with ease. By the time it even broke below this market confirmed that this structure is real. You see that this structure is real. So if that structure is real and market retrace back up like this, it retraces back up to this zone. So it retraces back to this place. Then our entry is confirmed. So our entry is going to be this much. Our target rather is going to be 300 pips or 310. Then our risk is going to be half of that, which is 150. This is it. So if we color this one now to be this and we fill it, that's our risk, while our target is going to be this. You see that? Tell me why this trade is going to fail. It will not fail. It will not fail. So what will happen is this market will plummet when it targets that, because we have aligned price on all the time frame up to daily time frame. You see that? By looking at it, you yourself will even know that this is real. This is real deal. You understand? So let us watch out. I'm not saying you should trade it straight away, but take note of it when it happens so that you'll be able to confirm that what we are talking about is real. And if market refuses to follow this trajectory, where we adjust our analysis and I will update you as it unfolds. So thank you for watching. In case you enjoy what you have just watched, kindly smash the like button and do not forget to subscribe to my channel and turn on the notification bell. Thank you.